let's jump right in. We're about to pull back the curtain on a financial tool that is, well, it's seriously powerful. This is the kind of thing savvy property investors use to grab opportunities that most people, frankly, just can't touch. It's incredibly fast, it's super flexible, but you know what? It also comes with a major health warning. So picture this. You're at a property auction. Your heart's pounding, the hammer falls, bang, you've won. The adrenaline is just surging. But then this cold reality hits you like a ton of bricks. You've got 28 days, just 4 weeks, to find all that cash or you lose the property and your 10% deposit. Poof, gone. Your bank? Ha! They just laughed and said a mortgage could take months. The clock is ticking, loud. So what in the world do you do? Well, this is the answer. This is the solution to that crazy high-stakes problem. It's a financial bridge. It's a very specific kind of loan that's designed to do just one thing: get you from where you are, now, to where you need to be and to do it fast. This right here, this is the key that unlocks those deals that look completely impossible. So what is this thing exactly? Okay, let's break it down. An unregulated bridging loan is a short-term loan, but, and this is the absolute most important part, it's for business or investment properties only. We're talking about properties that you will not be living in yourself. Think about buy-to-let properties, houses you're going to renovate and flip, commercial buildings, even a simple plot of land. Now let's zoom in on that one word, unregulated. This is where the entire game changes. See, when you get a regular mortgage for your own home, it's regulated. It's protected by the Financial Conduct Authority, the FCA. They have all these strict checks to keep you safe. But an unregulated loan, it assumes you're a business professional. It's not a consumer product. And because of that, all those safety nets, they're just gone. You're playing by a totally different set of rules. And you gotta understand, this isn't some little niche corner of the market. Not at all. In 2024, the UK bridging loan market didn't just grow, it absolutely exploded, past the £10 billion mark. To give you some perspective, that's more than the entire UK music industry makes in a year. So yeah, this is a massive financial engine. And wow, it's not hitting the brakes anytime soon. I mean, just look at the momentum here. It's projected to soar past $12 billion by the end of 2025. That kind of insane growth tells you just how critical this tool has become for property investors and developers all over the country. So you might be thinking, if it's so much riskier, why on earth would any smart investor touch it? Well, it all comes down to 3 huge, absolutely game-changing advantages. All right, let's get into the good stuff. First up, and this is the big one, it's all about incredible, almost unbelievable speed. Seriously, this is the superpower of bridging finance. Just think about it for a second. A normal mortgage, you could be waiting 2, 3, maybe even 6 months for that to come through. A bridging loan, it can have the money sitting in your bank account in 1 to 2 weeks. Sometimes it's just a matter of days. That speed lets you go toe-to-toe with cash buyers. It's how you win those auctions, and it's how you snatch up those amazing deals on so-called unmortgageable properties. You know, the ones that need a ton of work, maybe they don't even have a kitchen, and traditional banks just won't go near them. Okay, advantage number 2 is a complete mindset shift. It's all about unmatched flexibility. See, high street banks, they're lending to you, the person with the credit score and the job. Bridging lenders, they're mostly lending against the property, the asset itself. And that one little difference, it changes absolutely everything. And this is just huge. The lender's main worry isn't your monthly payslip. It's the value of the building and, here's the key phrase, your exit strategy. That's just their lingo for your plan to pay them back, right? Either by selling the property or by refinancing it onto a normal mortgage later. And because that's their focus, things like a less than perfect credit history or not having a steady proof of income, well, they're not always a deal breaker. This approach literally opens doors that traditional banks would have slammed shut in your face. And the third massive advantage? Scale and versatility. These loans are built for business. They're designed from the ground up to help you grow your portfolio and grow it fast. I mean, we're talking loans from 50 grand all the way up to 10 million pounds or even more. You can use them for almost any type of property deal. And get this, you can even secure them against a property that already has a mortgage on it. It's called a second charge. It's really just a way to borrow against the equity you've built up. It's the secret weapon that professional developers use to unlock cash from their current properties to fund their next big project. Okay, so we've seen the incredible power. But for every single one of those advantages, there is a very serious risk lurking on the other side. So let's totally shift gears here because this is the part you absolutely cannot afford to skip. This is the price you pay for all that power. All right, let's be totally blunt about this. Risk number one is the eye-watering cost. All that speed and flexibility, it is not cheap. No, sir, not even close. I mean, just take a look at this. Your typical mortgage rate is maybe 5% a year. A bridging loan, they charge you monthly. That 1% a month sounds small, but do the math. That's a 12% annual rate before you even start. Then you stack on hefty arrangement fees, legal fees, valuation fees, the list goes on. And often, the interest is rolled up into the loan, meaning you don't pay it each month, it just gets added to the pile, getting bigger and bigger, creating this massive lump sum you have to repay at the end. Risk number two is what that word unregulated really means when things get tough. It means you're flying without a safety net. So, what does that mean in the real world? It means you have no FCA protection. You don't have a legal right to a 14-day cooling off period to change your mind, and there's no official requirement for the lender to treat customers fairly. The whole system is built on the assumption that you're a professional investor who knows the risks and accepts them. So if a deal goes sour, well, that risk is 100% on you. And that brings us to risk number three, the intense ticking clock pressure of repayment. This is a short-term fix, and believe me, that short-term can feel very short when you're in it. You usually only get 12 to 18 months to get your project done and pay back every penny. But what happens if your builder gets delayed? What if the housing market suddenly takes a dip and you can't sell for the price you planned? If you miss that deadline, you get slammed with brutal default interest rates and fees that can evaporate your entire profit in just a few weeks. And the worst-case scenario? The lender repossesses the property. They take it, sell it, and get their money back. It's as simple and as harsh as that. Okay, so we've seen the amazing upside and the, let's be honest, terrifying downside. So that leads us to the single most important question. Who is this stuff actually for? Let's make this crystal clear. This is a tool for experienced professionals. It's for people who have a rock-solid, numbers-backed, absolutely bulletproof exit strategy before they even sign the papers. You have to have calculated every single possible cost and, this is crucial, you have to have a cash buffer for when things go wrong, because they sometimes do. I'm going to say it again, this is not for beginners. You know, at the end of the day, you've just got to see it for what it is. It's a true double-edged sword. On one edge, you've got this incredible speed that can help you build a property empire. On the other edge, it's razor sharp, with sky-high costs and immense pressure that demand nothing less than absolute professionalism. You have to treat it with a massive amount of respect. So there you have it. You now know the power and you know the peril. The crucial question isn't about whether bridging finance is a good tool or a bad tool. It's an incredibly powerful one. The real question you have to ask yourself is this: are you the right professional to wield it?